a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about Homebuilder Stocks and ETFs. And Homebuilder Stocks are among the top performing stocks this year, of course, behind AI stocks and chip stocks. This comes after a terrible performance last year because the Federal Reserve had raised rates aggressively and the housing market had plunged from its pandemic-driven highs. Now, this morning it was reported that housing starts surged 21% in May. That was the biggest jump since 2016, very unexpected. Then yesterday it was reported by NAHB that US homebuilder sentiment improved to an 11-month high and also moved into a positive territory in June. So according to NAHB, the National Association of Home Builders, this was due to solid demand, a lack of existing inventory, and improving supply chain dynamics. Additionally, these home builders had reported very strong first quarter 2023 earnings. According to State Street, 25% above estimate versus 6% for the S&P 500 index, and revenues were also very strong, 8% above estimates versus 3% for the S&P 500 index. So let's see what's going on in the housing markets. So existing inventory remains very low. Existing home market supply is very tight because of this sudden rise in mortgage rates. Many existing homeowners who have their mortgages at 3%, below 3% or below 4%, they are reluctant to sell and then buy another house at a much higher mortgage rates. In fact, about a third of all homes listed for sales now are new homes. But at the same time, mortgage rates are now off their peak. The average rate for a 30-year fixed rate mortgage last week was around 6.7% according to Freddie Mac, and that is down from their 20-year highs mortgage rates had hit in last fall, and they had topped 7%. And now that the Federal Reserve is expected to halt its tightening campaign soon, so mortgage rates are expected to come down, and that is good news for the housing market. And the demand remains strong despite these high interest rates, high mortgage rates, because labor markets, we know, have remained tight, and how consumers have remained rather resilient. So their balance sheets are still strong. Lumber prices are down about 25% year to date. That is according to calculated risk, and that boosts profitability of home builders. At the same time, affordability still low. Many prospective home buyers are not able to buy because high home prices and high mortgage rates, and small home builders who are very much reliant to regional banks, they may face challenges in the coming months because of the issues in the regional banking space. Now we are taking a look at two very popular home builder ETFs. The first one I'm highlighting is the most popular product in the space. This is market cap weighted and very top heavy, has about 2.1 billion in assets and an expense ratio of 39 basis points. The ticker symbol is ITB by iShares. Let's take a look at this ETF by going to the quote page on Zacks.com. So you can go to the quote page, read our research report articles using the link. You can go to iShares webpage for this ETF and see what it does, what it holds. So it provides exposure to US companies that manufacture residential homes and other equities in home construction sector. Now, being market cap weighted, as I mentioned, it is very top heavy. The big ones in the space, DR Horton, Lennar, NVR, and Pulte Group, they account for more than 40% of the portfolio. Now, in terms of sector exposure, home builders account for about 67%, and then you have building products, home improvement retailers, etc. Now, the second ETF in this space is somewhat different. It is by State Street Spider Homebuilder ETF. The ticker symbol is XHB. So this is equal weighted. So if you're worried about top heaviness of the earlier ETF, you can look at this ETF. Also, it provides exposure to more sectors, more industries apart from home builders. Slightly cheaper and still very popular, 1.3 billion in assets. Again, let's take a look at this ETF by going to the quote page and using the link, going to State Street webpage for this ETF. Let's see what it holds, and you will see home builders, but a lot of other related stocks as well. Lowe's, Carrier Global, which is AC manufacturers, Whirlpool, home appliance manufacturers, Johnson Controls, etc. in this ETF. So you get a more diversified exposure, and you can see from sub-industry allocation here, home building accounts for 32% only, unlike 67% in ITB. Then building products is about 46%, and home improvement retail is about 11% in this portfolio. Now let's take a look at the performance versus the S&P 500 index over the past year. So because the builders have done so well, so ITB, which is top heavy, has done much better than XHB. This is up about 67% over the past year, and you will see that the other ETF, XHB, is up about 49%, whereas the S&P 500 index is up about 23% over the past year. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. Also, make sure to subscribe to all our videos, our video channels, so that you do not miss anything. And I'll see you next week.